Welcome back, my awesome people. In today's episode, I will be highlighting the biggest mistake that many people commit, and that is putting most of their money in a bank. Of course, I am not saying you should not have a bank account to save your money for an emergency fund or a rainy day. What I am saying is that the majority of people have most of their money in a bank and barely in investing. So why is putting most of your money in a bank an issue? Well, because most people have been taught the virtues of saving in a bank. But want to hear something crazy, like really crazy? When you put money in the bank, you actually lose money. Lose money. And not only will you lose money, but the bank actually uses your money to invest in various investments. So they can turn a profit and give you a tiny return on your deposit. Now, that old age saying of how a penny saved is a penny earned is exactly how banks make money through the money you save with them. When you put your hard-earned money in a savings account, the bank pays you interest. It's a pretty sweet bonus to have, for simply depositing your money. But do you ever think about why your bank pays you an interest and how? Well, here's how. The money your bank pays your interest with comes right from the savings or checking account that you're earning interest on. This begins to explain where a bank finds the money to pay you interest. The money doesn't come from thin air. Your bank needs to make money somehow. And what better way than from your savings accounts? Banks use your money to make money. Each time you make a deposit, your bank essentially borrows some of that money from your account and lends it to other borrowers, whether it's an auto or a home loan, a personal loan, or even just a credit card. Remember that time you took out a loan from your bank? The money you borrowed from the bank was actually taken from the deposits of other customers. The interest that you paid on that loan balance added up as a perfect source of revenue for the bank, part of which they repaid back to those deposit makers. Likewise, your bank deposits go to fund loans for other people, and the interest that those people pay back becomes some of the interest that you earn on your account. Technically, you're lending your own bank some money and they pay it back with little interest, the same as on any loan. But since banks are in the business of making money, they'll never ever pay more interest than they can charge. A high yield savings account may yield you interest of about 1% if you're lucky. The wider the difference between interest rates, the more profit a bank makes. For instance, a bank may offer you 1% interest on your checkings or savings deposits, but then set an 18% rate on one of their other credit cards. The interest they pay to you is greatly offset by what they can earn from lending money at a much higher interest rate. So if you deposit $5,000 into a savings account, you might earn a 1% interest rate, but your bank can lend out a majority of that money at a far higher rate, enough for a profit and to pay you your interest. And for more strategies and tips on money, investing, and creating financial independence, follow me on my Twitter at Jacob Rant and get bullish on that subscribe button for the YouTube algorithm and smash all the likes and bells to get all the updates on my many fantastic investments. And comment below with what you think about these growing industries, because I do reply to every comment. And again, if you are watching this video and do not have a Wealthsimple trade account and you want $0 commission fees that won't eat into your profits, especially if you're buying penny stocks, sign up with my Wealthsimple link down in the description box below, where you will also get 3 free stocks, just like Webull and the other platforms, just for signing up. Link is below. So if I'm not putting my money in the bank, where should I put it? Well, there are various places you can park your money and receive a much higher return. And that is through investing in places that will give you much higher returns than a bank would, such as stocks and real estate investment trusts, also known as REITs. While in many cases, many of them have a 4% and above dividend yield. Of course, the risk is higher than saving in a traditional bank, but without risk, there is no success. If you don't want to pick your own individual stocks and REITs, a great option would be investing in an index fund. Currently, investing in the S&P 500 index has yielded an average return of about 8% per year over the past 60 years, whereas a bank may only offer 1%. And this is where the scary inflation monster comes in to not only take your 1% return, but even more, since inflation is usually higher than the interest that banks offer.
I don't understand. What do you mean, Jacob Rant?
Well, for those that don't know, inflation is an economic trend of increasing prices from one year to the next. The easiest way to illustrate inflation is through a simple example. Suppose you can buy a burger for $10 this year and annual inflation is 5%. Theoretically, 5% inflation means that next year, that same burger will cost 5% more, or $10.50. So if your income doesn't increase by at least the inflation rate, you will not be able to buy that one burger. Inflation means that the value of your money decreased. This discourages savings because your money is worth more presently than in the future. And the problem is that when interest rates, which is what the bank pays you in exchange for making a deposit, is lower than inflation, which is the rate at which money loses value, it means your money is actually worth less in the future than it is now. So it's not that you put in $100 and get out $98, but that the $100 you worked so hard to save can only buy $98 worth of items, which is what the economists call your purchasing power. That's why investors talk about beating inflation, because interest rates and inflation are in a race to either make you money or steal your purchasing power. You're Superman and ready to fly, but inflation is the kryptonite dragging you down. That doesn't mean saving is bad, because it's still how we get enough money together for important things in life like weddings, a first home, or a family emergency. It simply means that saving in a bank can be part of your financial plan while investing, instead of solely relying on saving in a bank. So simply put, banks use your money to make money, then to make you money. It's the natural cycle of banking business that keeps you and your bank profiting from each other. With that in mind, the most proactive thing that you can do if you have a deposit account is to make sure you're getting a good savings rate. Shop around for the right products and the right bank to maximize your earning potential. Interest is passive income. By taking an active role in finding the best interest rate possible, you can make your money go further than ever. But remember, always do your own due diligence when you are buying any investment, because I am just a clown on YouTube. And again, if you are watching this video and do not have a Wealthsimple trade account and you want $0 commission fees that won't eat into your profits, especially if you're buying penny stocks, sign up with my Wealthsimple link down in the description box below, where you will get 3 free stocks, just like Webull and the other platforms, just for signing up. Link is below.
So again, I am not a financial advisor, so make sure you do your own research and consult your own financial professional.
Thanks. There is so much wealth out there for all of us to get a piece of. So by allowing our hard-earned money make us more money is the key to wealth and the key to financial success. Subscribe, like, and share to help out the channel, and so you will get notified of when I post my penny stocks, REITs, dividends, and speculative stocks from my portfolio and any other investments that I am buying and selling. I want everyone to have the opportunity to get out of this work-life trap by buying back their freedom through investing. So let's all ride together on a journey of health, love, success. So until the next video, stay ranting.